You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, Jim. Thank you.
Are you a financial advisor?
No, I'm not a financial advisor, nor do I provide financial advice. I'm a newsletter publisher. Used to be an advisor years ago on a fund here in Arizona, but no longer doing that. And just provide our market commentary and stock ideas on VRTrader.com, also known as Leibovit VR newsletters.
Mark, can you tell us a bit about how you came up with the VRTrader.com idea? What's it stand for, VR Trader?
Okay, so it's a long story. I'm glad you brought it up, since we have a long holiday weekend coming up, so we might as well delve into something a little different. So when I was very young, probably 2021, so we're talking, 56 years ago. So anyway, I went into a brokerage firm in Miami Beach, Florida, where I was living at the time, and that's where I grew up. Very few people can make that claim. Actually, went to Miami Beach High School and the whole deal. It was the fun and sun capital of the world. It was the days of Jackie Gleason and Arthur Godfrey and all the fun stuff that I grew up in with the hotels and the whole thing. So that's the high school. It's like growing up in Beverly Hills or Hollywood, I guess, in a certain aspect. I guess that's why I became so movie-oriented or entertainment-oriented over the years, and so was my younger brother. But anyway, I went into a brokerage firm. I was interested in the stock market, and you see the tape running, and it was all exciting. And I run into a elder gentleman sitting there watching the tape, and we start chatting. His name was Roger Cole, and I guess at the time he was probably in his 70s. He passed away in his late 80s, and he starts telling me how he knew everybody on Wall Street from the old days, before they had the electronic ticker tape, when he was on the floor of the New York Stock Exchange, and actually used to post, supposedly as a young man, actually post stock prices on a chalkboard that was on the exchange before they, believe it or not, before they had the electronic tape. So this is going back, I guess, before the 1920s or thereabouts. I can't give you the exact date. So, he knew Jesse Livermore, he knew the founding, and by name, the founders of all the major brokerage firms, without mentioning names, but, there are, names out there that they named the firms after over the years, and said, I knew such and such, and he was a founder of this firm, and you would recognize the name because it was a famous name of a founding firm. So it was a pretty impressive story, and he started telling me that he does work using volume work and other technical tools, and start teaching me a little bit about technical analysis and volume, and I became a student of his, and ultimately I put it all together in the years, moving between that time up to the late 70s. It was about a 10-year period, and I put together a newsletter, I think it was July 21st, 1979. I called it the Volume Reversal Survey. It's funny because I just got off the phone with the U.S. Patent and Trademark Office in Washington, D.C., renewing my logo for the Volume Reversal Survey, which was created way back in the 1970s. So funny we were even talking about it today. I just did that because you have these 10-year renewal periods, supposedly. So anyway, I created the Volume Reversal Survey. It was influenced by Roger's technical analysis about the way the markets are manipulated and traded and what they did on the floor, and you got to follow the volume, and it all started way back then. And then I ended up going to Chicago and trading on the floor of the Chicago Board Options Exchange and watching the volume patterns on the floor and seeing how big blocks of stock above the market would be picked off, and that would be a sign that what I would call, I guess Roger would also call, a volume reversal, because they were accumulating huge sums of stock to clean out the supply so the stock could move higher, and vice versa. When there was a big bid below the market and they would hit that big bid and clear it out, that'd be like a negative volume. pattern that would indicate it was going lower, or at least they were trying to move it lower. So, is the long history of how it all happened, influenced by one man and getting to the floor and putting all the pieces together. So without going into my whole life's career and everything that happened since or around that time, that's sort of the generic background. So we came together with the volume reversal, which just simply says that if volume precedes price, and you see it on the charts every day for various stocks, it's usually a sign that smart money or trading money or institutional money is starting to move that particular stock or index in that direction, whether it's up or down. And you generally want to follow that movement because these are guys that, run the market, and they, whether it's Goldman Sachs or Morgan Stanley or some of the big firms that are placing the orders that are making that move begin, it's irrelevant because it's creating momentum in the direction. So I use this for trading purposes. I do a lot of stuff besides this, a lot of cycle work and, a lot of other general analysis about what's happening in the markets. So, for example, the past week or so, Donald Trump comes out and says he's going to revitalize the coal industry in the United States, COAL, which has been depressed by previous administration. So, sure enough, when you pull up the charts, you start to see volume come into the coal stocks because now we have, a president and an administration who is behind coal, where before it was poo-pooed and it was considered the worst possible energy source on the planet, according to some, that referring, of course, to coal. But at the same time, China is a heavy user of coal, and so is a lot of parts of the world. So when Donald Trump decided to revitalize or try to revitalize the coal industry, volume came into all these coal stocks, many of which have been very depressed. And, as a result, we pull up the charts and we put them on our list to follow because now you've got some reason why the coal stocks could rally. So that's sort of an example of a volume reversal, or VR as I call it, because, when money is moving into that particular stock or sector is actually an ETF you could buy for coal. So it's been depressed, and assuming it'll take time to get all the coal moving again, though I still, from what I researched, a lot of coal is being used and delivered all the time. So just another opportunity that came up, and, watching the volume and the activity going into it. So you're tying a news story into volume to see if everything syncs up. And if you see the volumes come in, which it did, it says you're starting to get some momentum to the upside. So coal stocks, which we, added to our list this past week, have been upticking and probably will continue to do so over time. So long-winded discussion regarding, how I apply the volume reversal and an example of what happens when you see volume come into a stock. And it could be without a story or with a story. And if you have a story and you've got the volume, then you usually got some momentum, and you want to play it up or down depending where the story or the volume is moving.
How would you describe what happened on the stock markets this short week?
Well, there's a notion that the markets tend to, I guess the best phrase to say is change direction or settle down ahead of a holiday. So when a long holiday is coming, the markets have been rallying early, and then as you approach the holiday period, they tend to go the other way. It's like everyone's backing off from their positions because of the holiday coming, and they just sort of changes direction a little bit. So it's not a hard and fast rule, but it's sort of a holiday effect that when you see a 3-day weekend or a long weekend coming up, the markets have been rallying a week or so before that. They'll start to pull back, or if they're pulling back, they'll rally a little bit. I guess traders unwinding positions or just trying to minimize their exposure over a long holiday weekend. So we knew it's a holiday week this week. We also had Passover starting this past weekend, which runs through the end of this week. And, of course, we've got Good Friday tomorrow and Easter Sunday coming up. So, a lot of traders or investors may just take the time off. I know in Passover, many traders just take the whole week off, and, of course, with Easter and so forth. So it makes sense that the markets would be a little jittery or sort of switch around or change directions back and forth. But, of course, it's been a little volatile anyway in recent weeks, so not too surprising.
What's going on with gold?
Well, on a very short-term basis, it in my opinion, it made a little trading top, and it was looking like it was overbought here a little bit. And in fact, my good friend, who you also interview, Ross Clark, sent me a little message the other day that he was seeing the same thing. So what I actually did was I put on a short position in gold and silver ETFs as a hedge against our bigger positions. I don't want to sell everything off because it could be just a little trading top, or you don't know when it comes in. So it got a little overextended. So we put on some inverse ETFs for gold and silver, and they're actually both down today. So we're actually up a little bit in those trades. And again, I have to emphasize the word trade. It's not. It's too early to tell whether a big top has come into gold and silver. It's going to happen at some point. I mean, we've had such a huge run here, and at some point there's going to be a shakeout. We've seen this over the decades, and even in recent years, where suddenly you get 300 to 500 point corrections in gold, and it's not pleasant if you're sitting there holding those positions. But it could happen at any time. It may not happen this time, but in any event, we're taking sort of a trading perspective. So just put a little hedge on, and we'll trade accordingly.
What's happening on the crude market?
Starting to bounce here a little bit. You know, it hit our target, which we broadcast on these interviews previously. I talked about that it looked like it was a Trump effect, drill, baby, drill. I had a target of $55, maybe even as low as $47. So it got to 55, and it's got oversold here. It could still go back and drop down to the 40s, but it could be, weeks or months from now. But in any event, it got oversold, and it's in a little technical bounce phase now. But I think the trend should be down, which, by the way, should be very bullish for the stock market because, lower crude oil prices, less inflation, less tax on, so to speak, on individuals because their cost for energy is less. So I hope that crude oil stays down, and the only variable here is some geopolitical event, sudden outbreak big time with Iran or with, other players out there in the Mideast or around the world, and suddenly oil takes off again for, again, a geopolitical reason. That could always happen, but it looks a little oversold here and needs to bounce a little bit. So I think, except for bounces and a catastrophic geopolitical event, I think, assuming the Trump dictate continues to work out over time, there should be more production of oil, and prices should not take off to the upside. We should see pressure on oil prices, and things change in the charts. So we start breaking out some big numbers. We'll change our thinking accordingly. So the technical picture right now is oversold, bouncing, but it appears like we may still go lower later. So, we watch this day to day, and we traded out of our short position, which I talked about when we broke as much as we did here in the past week or so, and did not reverse, though. I didn't go long. I should have reversed. I didn't. I should have just jumped in, reversed positions, and then got long here, and maybe I'll still consider doing that. I got to look at the charts again, but that's sort of the short-term picture.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's going on with the U.S. dollar?
Well, it's been dropping, and that's, historically good for commodities, and particularly, gold and so forth. It just in a corrective phase, and I can't give you the reasons. There's a lot of reasons, speculation about, alternate currencies and, I guess disenfranchising from the dollar and other countries trying to use other currencies and so forth. But it's definitely, been under pressure here. it's getting a little oversold here. I'm looking at the chart now. So it's been sold for, according to my chart, since December. Some sellers had come in and it's been under pressure. So gold bugs like this because of the inverse supposed. It doesn't always work. It's not 100%, but it tends to work more than not. The inverse relationship between gold, silver, and the dollar. But commodities as a whole I liked, and I put a bunch of those on our list, soybeans and corn and wheat and all the other, commodity-related ETFs because it appeared that they were going to uptick as a result of a weaker dollar. So that's, sort of the picture. It's in a downtrend, and I can try to sound really smart here and tell you the exact reasons why it's down. There's all differing opinions of why the dollar is suddenly under pressure, including the fact that, there's been so much mismanagement of the debt in the United States and, the misuse of our the Federal Reserve's interest rate decisions and on and on and on. So the thought that maybe, you have to be out of the dollar and be in other currencies. And we know the euro is starting to rally a little bit too. So, but, we're just sort of playing the charts and trying to figure out how to benefit from it. And right now it's been the commodities that are inversely related to it. So it's just looking at the charts now, it's dropped so much, it's due for a bounce, I think. It's a little oversold here, actually very oversold. But before I would take a position long the dollar, I'd want to see some volume come into it to the upside, and that may come after the holiday. So let's see what happens.
Anything for us to watch on the geocosmic front?
We had a little, solar event this past this week on our. There was a severe storm that came through on Wednesday, and it passed. And I actually put a little note in my newsletter. Was the solar storm coincident with the sell-off we saw in the stock market that day, which of course may not have been the case, but that severe storm is now subsiding in the past 24 hours that came through. So, it's just fun to watch. I don't see anything new that's being reported from space agencies and so forth or spaceweather.com, but we did have a big storm midweek, and I just sort of jokingly wrote, gee, maybe that's some effect, and I guess I shouldn't discount that because we know lunar cycles and the geocosmic seasonal patterns and stuff do have effect on the market. So you can't discount the fact that if there is a solar storm and you're having all this geomagnetic, activity on the planet, it would not have any effect on human beings or their thought processes and so forth. And we all seem to think that we're immune to anything, that we don't have physical control over, and could very well be the case. So that's the most recent event, and we've got a new lunar cycle at the end of the month, and that's outside of that, it's pretty quiet right now. So fortunately, the solar storm that I just referred to is subsiding, and that's the only thing I can report at the moment. But thank you for that question. That's all I have. Anything
interesting on the crypto front?
Always interesting on the crypto front. I keep writing the blockchain letter every week. In fact, we have to probably put it out a day early because of the long holiday weekend. It just mustering up strength for an explosion to the upside, and I can't tell you if it's 3 weeks from now or 6 months from now, but I'm using whatever weakness that comes into various low price cryptos and slowly add to positions in them. And I just think with the legislation that's going to come through in the next year or so here in the U.S. and the crypto reserve and the Bitcoin reserve being created, you got to be there. And it sounds extreme because you're talking about vehicles that are in some cases ridiculously priced, like 2 cents and some $1, or some like a Bitcoin, which is $84,000. But I think huge upside moves are coming. I think you have to have, like you would have for gold or real estate or any other asset, you have to have an allocation, in that sector, because whether it's 3 days from now or a year and a half from now, there's going to be another big move, and you got to be in there. So I would encourage listeners to sign up for the blockchain letter. It used to be called the crypto letter, but it's also the blockchain letter by the current name, and it lists all the various cryptos that are out there that we're tracking and things you should pay attention to. So I think there's a lot of opportunity ahead, and very excited about it. In fact, when we have shakeouts like we've seen just recently, it's, in my view, a buying opportunity, just as I guess gold bugs would say, well, if gold drops, I'm going to buy some more gold. It's just something you need to accumulate. And, what's the rough rule of thumb is, you probably wouldn't want to put more than 5% of your assets in anything, and that would probably be the maximum if you're aggressive in terms of crypto. But definitely something to watch.
Mark, thank you so much for chatting with us.
Thanks for having me, and to all our listeners, have a great rest of Passover week, and happy Easter to everyone on Sunday.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or for any of our guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you very much for listening. Happy holiday.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.